gears. Let's actually get into
grow, right? It will grow. Yes.
I see. So now there's, because obviously if let's say I have a government bond,
Yeah.
which is something that generates income.
Yeah.
Is there,
Capital growth options are like shares. Shares are good capital growth options. And I say this because I invested in shares. I'm still investing in shares. And I actually, invested in shares and then sold some of my shares to buy my car.
oh, fantastic. Okay.
Right.
So is that a good investment decision?
Yes, because again, it's what I wanted. And I am cognizant that this car is not really an asset. But I also saved and invested for it. You remember when I told you when I was in uni, my mom put me on Safaricom shares, right? So that's why I started my journey. So I started buying my car a very long time ago.
Right.
And I kept on adding, buying even more shares. And then that's where I got some of my money to buy my car.
Would you advise someone to invest in shares, considering that sometimes some drops?
No, it depends on what you want, right? It depends also with the level of risk that you are able to take, right? So if your risk appetite is good, you can take in the risk, and you are young, invest in shares, right? As one
If you're young.
If you are young and your risk appetites are good, then
Can
you
we say
invest.
risk tolerance instead of appetite? Because sometimes
Yes,
I lost
so
money in shares.
yeah, so
risk tolerance.
so you have the appetite. As in you can take in the
That's
risk.
like when you say appetite, that you mean like high risk.
Yes, as in you can take it in.
You're
Because-
willing to lose it.
Yeah, as
Kama
in you can take
ikienda
it in.
mbaya,
50,000 just
ikienda ni hivyo.
becomes
Yes.
10 million.
Yes, and that's why I said you can't put your rent money here. You get
School
you
fees.
can't put school fees here.
Yes.
Yeah.
But can I ask, why do you say that when you're young? Is there a connection between being
Yes,
young
there
and
is a
taking more risk?
connection. Yes, because the younger you are, the more risks you can take. When you're young, when you're in campus, when you're just started your first job, you don't have a lot of responsibilities. You might not have a family. You might not
Like
have
you
a
guys have better appetite than me.
Right.
You
Yeah,
have a child. I'll get a heart attack.
Yeah, so
If my 100K was to disappear.
yeah, so you don't have a lot of responsibilities looking at you, right? So you are able to take that risk, right? And then when you're also looking at capital growth, growth takes time, right? So when you want your capital to grow, you might consider investing someplace for like 5-10 years before actually you give this investment time to grow, right? Like shares. A good company, would just grow like that. Like we're talking about Safaricom. And I can talk about Safaricom because it's a publicly listed company. Started at 5, it's now 40, right? Imagine, 5 to 40.
Wow.
You can see the percentage, you can calculate the percentage, right? But then look at how long it has taken, right? Yes. So, guys, that patient, I think, most guys are not that patient. They want pap. But again, I always say you need to spread your money. Put some in capital preservation, some in income, some in capital growth, right? And then give it time. Investments generally take time, right? So if you have some good money set aside and you can take the risk and you have some time, then you might as well buy some shares, right? Now, be very careful when you're buying shares. Why? Because there are high risk, right? And they say high risk,
High reward.
High returns.
Now, I want to correct you.
Kept quiet. Because me, if I don't know anything, I keep quiet.
Now, yes, they say high risk, high return, or
But
high
also
reward.
high losses.
But now,
Both ways. It could be both
yes,
ways.
it could be both
Both
ways.
ways. High losses
So
or high returns.
we say high risk, high potential of
High
return.
potential.
It's not always guaranteed.
Right.
Yeah, that's true.
Right? It's not always. So high risk, high potential of return.
Yes.
And when if you've been paying attention, we've looked at capital preservation, which is low risk, low return, and then we talked about income, which is sort of in the middle.
Yeah.
It's moderate, right?
Yes.
And now we're talking about capital growth, which is high risk, high potential of return, right? And that's why I said, so what do you want your money to do for you? Do you want to grow your money? If you want to grow it, then you need to have the risk appetite, you can take in the risk, and then you need to give it time, right? Now, for you to buy shares, you need first of all to have a CDSC account. You need to open this CDSC account with stockbroker, and the Capital Markets Authority, again CMA, will tell you the list of stockbrokers that are
Credible.
that they've licensed, right? Now, you look at the stockbroker that you want, and then you go through them and tell them, I want to buy shares of company XYZ. Right? Now, this is why it gets complicated. How do you choose a company to buy shares in? Because there are like 20 companies listed in the NSE.
Yes.
How do you choose which companies to buy shares in?
Yes.
Now, there are a few things you can look at. First of all, I said initial amount of shares you can buy is 100 shares.
Okay.
Right? So shares is 100 shares. Okay? Now, you also need to look at the product or the service that this company is offering. Right? What does this company do? What does this company sell? And then ask yourself, will this thing be sellable 5 years, 10 years down the line? All right?
Yeah.
All right?
Yeah.
You get it?
Yeah.
I like that.
It makes sense.
Makes sense, right?
Yeah.
So when
No,
you-
she's having an aha moment. The rest of us already had this moment.
Continue.
So you get. So ask yourself, what is this company selling? What product or service does it sell?
Right.
Will it be relevant 5 years, 10 years down the line?
Right.
If yes, that's number one tick. Number two thing you need to tick is the market. The people who are going to buy this product or this service, are they increasing in number or are they decreasing? Right?
The
No,
people
this
who
is
are buying
research
this.
you do it, or this is research your broker gives you.
This is you doing it.
Your due
Now, first of all,
diligence.
investments, they take time. And they also need you effort from your side and research from your side. And that's why I said unit trusts are good. Because instead of buying shares directly, you can buy unit trusts that will invest in shares. They are called equity funds. Now,
So
shares...
it's sort of like a middleman.
Yes. So shares are also called equities or stocks.
Yes.
Right? So if you don't want to... Okay, let me... Number
Okay,
one,
take us slow.
Number one, we've said you need to look at the product or the service that
Right.
this
Yes.
company is selling,
Yes.
and
The
then
longevity.
ask yourself, will people still be buying this product? And then number two is the market. Will there be people wanting to buy this product or this
5
service
years.
5 years, 10, or are they increasing?
The TA. Will
Yes.
it still exist?
Yes. Now, number three is look at the people who are heading that company, the people who make the day-to-day decisions of this company, management, the board of directors. What do people say about what are you hearing in the news about these people?
Surely, Michael, we start doing all this.
Yeah. Okay. Listen.
Hey,
Listen.
work.
Yeah, it's work. Investments again, they take work, right? And that's why they're fun.
Yeah.
And that's why when you're looking at the news,
I had a question around good debt and bad debt in the spirit of saving.
Yep.
So you asked, is
Investing.
investing? Sorry,
Yeah.
no, but we had started the conversation of
About
around saving,
saving,
right?
yes, yes.
So now, as we transition, when you think about a car as an asset, is this a good debt or a bad debt, or how?
The question I asked is taking a loan to buy a car.
yeah. Now,
Is that
He asked what type of car.
what type of car, right? Yes. So
for parking here?
for parking there,
Over
then
here in Standard Media.
then that's a bad loan.
Okay.
Because first of all, that car is not bringing you money. If it's a car for business, well and good, right? Because it's
Yeah.
bringing you money,
Yeah.
and you can now use that money that's
Yeah.
bringing to pay back the loan.
Right.
But now, if it's just a car that you are using to come and then it's parked here half the day,
Yeah.
and then you
Let's go a leisure.
Yeah.
It's for leisure.
and then you put fuel. Yeah,
Yeah.
these prices, and then you service it.
Sasa
But
tuuze gari.
There's more.
No. By the way, do not. I'm not saying you sell your
Yes.
car.
Yeah.
I'm just saying you need to be cognizant that it's not really an asset if
Yes.
it's not for business.
Right.
It's good to have. It's convenience, right?
Yeah.
I also have a car, so nothing against cars and people who own cars, right? But you just need to know, at the end of the day, this thing is not really an asset because it's
It's-
not putting money in my
It's
pocket.
taking more out than putting
Yes,
in. Right.
but it's giving you convenience.
Yeah.
Ah.
So I think the reason that's such an important thing to ask is because many of us, especially when it comes to whether it's saving or investing, a lot of the time we don't have the knowledge, right, around how these things work. A lot of us weren't taught this in school. So when thinking about this, how important is investing? Is it something that we should all actively be doing, or is it a lot of the time we think it's only for a select few?
No. I think it's everyone should
Invest.
should be investing.
All of us should be investors.
All of us. All of us. First of all, because we all need to grow our money.
Yeah.
Right? And the thing about investing is you're growing your money. Now, saving, which most people do and most people know because it's it's just saving, just putting your money. It's good for start, right? Also because of emergencies. But at times, the places where we're saving our money, the returns that we get are not as high as the rate of inflation.
Yes.
Right? So first of all, if you are saving or if you're putting your money, if you're investing your money, the rate of return should be at least higher than the current rate of inflation, which I think is 5.7 or something like that. Right? So at least where you're saving or putting your money should be giving you returns of 6% and above.
Or higher.
Which
Right.
there are not many places that will give you that. If we
Yes. Now,
we're honest,
if you're saving, not really. But
Yes.
if you're investing,
then you can.
yes, now that
Yeah.
you can be able to beat inflation. Yes.
Now, for those of us who may not be too familiar with that concept, can you just break that down a little bit? For those who are thinking, what is the difference? Why does my return on investment have to be higher than inflation? What's the math
now,
there?
Okay, now, inflation, first of all, let me start with at least trying to explain what inflation is, right? It's the increase in prices of goods and services over a certain period of time, right? To put it in a better way, it's the power of money. Like 1,000 today, when you go to the supermarket with it, you'll buy less items than you would last year, right?
For that same amount of money.
Yes, with that same amount of money, right? So that's it. That's inflation. So it's just money losing power, right? So for you to be able to beat that, you need to be putting your money where it is growing at a rate that is higher than the rate of inflation.
Given that you're saying that we need to put our money and beat the power of inflation,
Yeah.
and we are talking about issues of before you invest, you need to have a saving. Now, if you really think about what you're saying, I'm looking at it from a layman's point of view, that as much as I would like to be saving, you're telling me don't just save. Save and make sure your saving works for you. That's what
Yes.
you're saying.
Yes.
Because even if I save, that doesn't make sense based on this explanation.
So now, savings makes sense because I've said there are situations or circumstances where your savings are the ones which will get you off, right?
They'll
an
parachute you,
emergency.
Yes,
yeah.
like an emergency,
Yes.
right? Before you go to the investments and liquidate your money, and to get your money, yes, you'll need the savings. And then also, savings are important because of expenses like rent. When you have rent, you have a lease agreement with your landlord, right? That the rent for this year will be X amount. And it's very rare that they change, right? Or they increase. So at least there you can, and even school fees.
For
You know,
that.
yeah, you
You
know
have a
school
fixed
fees for
structure
this
for-
year,
yeah.
it's like this. So there you can put your savings.
Yeah.
Right? Because you know school fees will not increase, the rent will not increase. You get?
Oh, so for you, you're saying saving needs to have a purpose.
Yes. Actually, savings needs to have a purpose and also investing needs to have a purpose. Right? Now, let's get into the nitty-gritties.
Please.
Why you need to save and invest, right? And also what you need to look at when you're saving and investing, right? Now, you always need to have an end goal, right? So what do you want your saving to do for you? What do you want your investment to do for you, right? So now, an investment should do three things, at least these three things for you, right? The first is capital preservation, right? So it should preserve your capital, right? And if you have a pen and paper, you can write this down.
That's literally what I'm doing right now.
Yes.
That's
Teacher
literally what I'm
Michael, we are
doing.
writing.
Yes.
Teacher Michael.
So,
Capital?
a good investment
Yeah.
should first of all preserve your capital, right? So capital preservation, right? Another characteristic of a good saving or investment is one that gives you income, right? Something else is one that grows your capital,
Yes.
Okay.
right? So there's capital preservation there's income, and then there's capital growth.
Income generation.
Yes, income generation, and then capital growth. Right. So an investment should do those three things at least. So if you start doing those three things, then it's not really a good investment.
Right.
Right. So if you start looking at betting, then it's definitely not an investment.
Investment,
Why? Because
yes.
it's not growing your capital, it's not giving you income, it's not preserving your capital. Right. Great. Now let's start from there first. Right. There's capital preservation, income, and then now capital growth.
Right.
So what do you want to achieve? Right. Now this will dictate where you will invest.
Your money.
Right. So if you want, again, to preserve your capital, and let me just put a caveat, finance guys are not so they're not so creative. They use words as they are. So when I say capital preservation,
Right.
it is exactly that.
Right.
It is
Preserving my
capital.
initial
Yeah.
capital.
So whatever I put,
Yeah.
at least I need that back.
Right.
My
Right?
200,000 needs to come
Yes.
back.
If 50,000, at least when I go there tomorrow, it's still there.
It's still there.
Yeah?
Yeah.
It has preserved my
Yeah, it's
capital.
preserved.
It hasn't gone.
It hasn't gone. Right? And you can see clearly a good example of this is like a savings account. Right? Because if you put 50 G's in your savings account today, tomorrow it will be there.
Yeah.
All right?
Yeah.
Right? So that's why I said you need to know what you need, what your money should do for you. Right? Now, people are, and I've said this, why you need to probably save your money or preserve your capital
Yes.
is because of things like rent and school fees.
Yes.
Right?
Yes.
Because you know this will be exactly this amount. You know, rent will be this for this whole year. So I can now put my rent money in capital preservation areas.
Right.
I can put my school fees money in capital preservation areas. Now, the thing with capital preservation areas, like savings, is like it's easy for you to get the money back. Right? You just go to the bank and then
Withdraw.
get your money and you withdraw. Right? Great. Now, capital preservation also will have low risk, right? And then low returns. Right?
Yes.
But I've showed you why you need it.
Yes.
Yes.
It's
Why
important.
it's necessary, why it's important.
The
Yeah.
purpose of it.
The purpose of it.
Yeah.
Right? So, if it's school fees money, don't put it in shares. You get? If it's rent money, don't put it in shares.
Yeah.
Because you think you want to multiply.
Yeah,
By the time
but
next term comes.
the shares money, you get?
Enjoy your appearance.
Yeah?
Enjoy your appearance.
I know you want to multiply,
I'm making for that term.
but
Uh,
it's not really capital. Shares don't fall into the category of capital preservation.
right.
You get?
Right.
Yes.
Wow.
So let's talk savings account, let's talk unit trusts, money market funds and the likes, right? So that will preserve your capital. At least you know my 10,000 that I put initially will be there.
Yes. Okay.
So at least let's get the concept of capital
Can I ask a
preservation
question
first.
on money markets? Talking
Yes.
about capital preservation.
Yes.
How does...
Before you do, let's take a quick break.
Oh, yeah, sorry.
As soon as we get back from this break, we can sink our teeth into it. I hope you are learning something today. We are having a great time here in the studio. I have got my laptop open and I'm taking notes as this gentleman speaks. If you have just joined us, my name is Arnold, also known as the Bad Boy Sweetheart, and we are talking about investment and how to grow your money with Michael Thotho from Centonomy. Do not go anywhere. I keep saying this is not something that you want to miss. You are just joining us. My name is Arnold, also known as the Bad Boy Sweetheart, and I'm not only in the studio with these two lovely ladies, but we have an amazing guest here with us today, Mr. Michael Thotho, who's here talking to us about investing and how to grow your money and ultimately make it work for you. Now, before we went on this break, Barbara, you're about to ask a question to this gentleman.
Yes, Michael, you talked about capital preservation and more
Yeah.
so money markets. Are you able to shed some light on that? Because you
Sure.
said it can grow my money. And
Yes,
anything
it
that
can preserve your capital. It
Yes.
will preserve your capital. Yes.
How
and
does
then
that work?
also grow your money.
Yes.
So you guys are conversant with chamas, yeah?
Yeah.
You guys are in chamas.
I am in several.
I'm,
So first of all,
I'm four.
is it a chama or a merry-go-round? Kuna tofauti. There's a difference.
Kunayo.
Yeah.
Only one is merry-go-round, but the rest are chamas and we do table banking.
Oh, good.
And we
Fantastic.
have investments.
And you guys know each other?
Yes. Hey, unaweza toroka na pesa yangu. I'm aka Nyambura. That's you can
Okay, so you guys know each other.
Go down is just for family, and it's more of like making sure that everyone has something to eat. So we do food, but the other three are more like investing and growing money and growing each other.
All right, great. So you know each other.
Yes.
And you are there for like a common reason.
Yes.
Yeah. So that's what unit trust is.
Yes.
So it's a sophisticated chama
Mm-hmm.
in that you don't know these other people. You get?
Right.
Or unit trust.
Yes.
We are keeping money, but we don't know each other.
Yeah. So okay.
What's the security?
it's like
if
a
Carico runs away. And
Now-
I'm in a unit trust.
Calm down. Calm down.
This is money.
Yes. No. Listen. No, I was just trying to simplify it.
Oh.
Right. So we call unit trust sophisticated chamas, right?
Okay.
Because it's people coming together with a goal, a common goal that they want to achieve, but now they don't know each other, right? So they come through someone else called a fund manager, right? Now this fund manager is regulated by Capital Markets Authority, and that's why they can't run with your money.
Okay.
Okay.
Together?
Yes.
And you said unit trust.
Unit
Yes.
trust.
Carico is about to join one tomorrow.
Yes, join one. But now, unit trusts, there are different types of unit trusts, right? There's one called a money market fund. There's an equity fund. There's a fixed income fund, right? Yeah.
Both
So
all can grow your money
all will preserve your capital
and grow it.
and grow your money to some extent,
So
right?
on this one, you will actually what you talked about. Remember, you talked about capital preservation,
Yes.
income generation.
Yeah.
So you can end up doing two.
Yes, so
In the place
unit
of
trust do at least two. They will at least preserve your capital. So what you get, what you put
In.
is what you get and some more.
That's
Right?
a nice one.
Yeah, so that's a nice one. And then also the risks are low. Yes. So it's unheard of for you to lose money in a unit trust.
We will not do those things. I've seen people in town doing demonstration that they put
No,
money
no, no,
somewhere, then
no,
it
no.
disappeared.
Okay. First of all, because it's regulated.
Right.
Something else I forgot to mention: a good investment is also regulated.
Right.
Right? There's someone that you can ask. Hey, you guys, I put my money here, and you guys are the ones regulating.
Yes.
And these guys are running the money. So
What's happening?
Yeah, what's happening?
It's
Right?
only CMA that does the regulations, or
Now,
there is someone,
it
the
depends
other bodies.
it depends on the kind of investment, right? If it's a unit trust, it's CMA who will regulate that, right? Yes.
Okay. So, something that I have, because I've been away from home for a very long time. So even
I can
you can tell.
You can understand by his accent.
Yeah. So even the
He was
concept.
practicing your name for about 30 minutes.
Hey, I had to
before
make
he
sure I
came.
didn't mess it up, you know. So the concept of chamas is very new to me. Even the concept of SACCOs are very new to me. So I'm sure because our listeners are quite diverse. We have people in the diaspora. Can you just explain the concept of a chama and the concept of maybe even like a SACCO and how in the case of them being regulated that would work?
So now, I was using the term chamas to explain what a unit trust is.
Right.
Right? So chamas are not really regulated.
Yes.
Yeah, because it's just guys that you
Yeah.
Get together.
That's why I have to know where Carigo lives.
Yes.
Right. Yeah.
So anyway, for guys who might not know what chamas are just people who know each other and have a common goal that you want to meet, just coming together and contributing towards meeting that goal, right? So if and that's why many people get to buy land, especially in Kenya, through chamas, right? Because land is expensive, but if you come together as a group, then you'll all be able to chip in something, and then you can buy that piece of land, right? So a chama should essentially help you achieve what you can't on your own.
Right.
Yes. So now, when it comes to unit trusts, there are some investments that are a bit hard to get to because of the initial capital required, right? Also, sometimes because of the knowledge that you might need before investing, right? shares, and we'll talk about shares later, right? Because you need some knowledge.
Yes, please.
But let's talk about investments like treasury bonds, right? For you to invest in a treasury, and I will talk about what treasury bonds are. For you to invest in treasury bonds, you need at least 50,000. Right? That might be a bit pricey for others, right?
To raise by themselves.
Yes, to raise on your own. But now there is a unit trust that invests in treasury bonds. Now, people who want to invest in a treasury bond but don't have the 50,000 can go through a unit trust.
Right.
Right. And now the fund manager will collect monies from XYZ people, and then they'll have that money to now go invest in a treasury bond. You get?
Then
That's
the
why
returns are shared.
now then you're a good student. Yes. And then now the returns are shared.
So
Right.
how do we access this fund manager? That's another question.
Just since he's taking notes. He's
I
taking notes.
am. How do I access now this fund manager so that I can join these three? For example, we go and go to the treasury bonds.
Now, I talked about regulation. So this fund manager, first of all, needs to be regulated by Capital Markets Authority.
Yes.
So right now, go to www.cma.or.ke. That's the website of the Capital Markets Authority.
Please repeat that.
www.cma.or.ke.
Okay.
All right. You will find the list of fund managers that are regulated. All right. You'll find them there. Now, there are quite a few.
Yes,
right?
they are
So
there.
you'll now, from that list, you can now pick the one that you like, and then do some research on it, and then look at what products they have and the returns they're giving, and then put your money there. Right. Now, unit trust, I said, are good entry point to investments because they will not need that like 50,000, right? Like for the case of treasury bonds. Some just need like 5,000. You get? But with this 5,000, you're getting to invest in treasury bonds, which you would not have if you were to go on your own.
Yes.
That's why now you go through a
The
unit
fund-
trust. Yes, the fund manager.
Manager.
Yes.
Wow.
I see. Okay.
Right.
So the question I want to ask is, does the type of investment one can do depend on how much you're making?
Yes. Now,
Is that such a big, because we find people saying, I don't have money, or I
yes.
have money.
Yes.
You know.
So, some investments, do require a lot of money. Like I just said, treasury bonds needs 50,000.
Yeah.
A treasury bill needs 100,000. You get? But now there are others, you can pass through this route of unit trusts to beat that.
Yeah.
Right?
Yeah.
And then also like shares, the minimum shares you can buy in a company is 100. Right? Now, if one share is 300 shillings, how much is that?
Quick maths.
Yeah.
Clearly mulianguka.
Hapa, wewe tuambie. That is where is the money guy. Anajua hesabu yote mse. Hey. And I like the way we all looked at each
Yeah, I was
other.
looking like, hey, the way we all looked at each other.
Who's saying this? That's too much.
But anyway, that's why Michael is here.
Yes.
So it might be hard for you to invest in shares if you don't have that kind of money. Yes. But now you can go through an equity fund, which is a unit trust. Yes.
Now, before we continue, we're going to take a small break. If you are just joining us, we are the adults in the room. We have Michael Thotho in the building who's talking to us about, really schooling us on how to grow our money. He's really giving us some gems. So I hope you're tuned in. I hope you've got your pens and your pencils ready. Now, I want you to make sure you jump on our social media handles at SpiceFMKE on Instagram, Facebook, and Twitter. Leave us a comment. If you have a question for him, we're going to be chiming into those as the show goes on. And the last thing I want is for you to miss out on all of this academic, intellectual, financial knowledge. We are the adults in the room. Don't you go anywhere. I'm the bad boy sweetheart, also known as Arnold Francis. Thank you so much for joining us, and I hope you're learning a thing or two today. I know I definitely am. There's a lot that I'm learning, and I think I've been away for too long. So we have Michael Thotho in the building, who is not only schooling us on all things money, but on investment specifically.
Now you've believed us when we told you to join our chamba.
Now I'm up to speed. This whole time I was hearing chamba this, sako that, and I'm like, I don't know what these things are. so it's good to be here and to be learning these lessons. So we were talking about you're kind of breaking down the different things that a good investment should do. You mentioned preserve capital. It should give income or provide income and then grow your income generation, and then grow your capital. So as we transition out of like capital preservation, and then we go into actually now generating income. One thing that I've realized is there's a lot of people that I have come in contact with who say, "Oh, I'm too old to invest. Oh, I'm too young to invest." Is there a limit or an age gap to when you should really start thinking about these things? And I know even with the Centonomy program, there's a lot of people who are in their older age who are now looking to invest. There's also younger people who will take your programs. How do you know when is the right time to actually start thinking about these things?
There's a Chinese proverb that says, the best time to plant a tree was 20 years ago.
Yes.
The next best time is now.
Now, right.
Yeah. So what I say is you're never too young or too old. Yeah, the best time is now. When you now have the knowledge and the information and the know-how, then go ahead and invest, right? So the best time to invest is actually now.
Okay.
Right.
You talked of capital preservation, income
Yes.
generation. Now, give us a hint on when it comes to income preservation. Now, I've done the unit trust and have moved on. I have preserved my capital. I am making income. Now, how do I preserve that income that you've given, that I've gotten from this investment?
Okay. First of all, we started with capital preservation.
Yes.
Which I talked about, like a savings account. I also talked unit trusts.
Yes.
Right?
Yes.
Now let's go to income generation.
generation.
Now, this is an investment that gives you income.
Yeah. Immediate, man.
That,
Yes.
that pays you.
Yeah.
Right.
Right?
Okay.
So let's say you've put your money away for like 20 years, but before you get your money back, this investment is going to be paying you. Right? And then at the end of the 20 years, you get back what you put initially.
What if I die in between?
Okay.
Now, that's
Those are the things I'm
no,
sorry.
that's
that I
why
ask
it's okay.
myself.
It's okay. Don't. By the way, no right or wrong answer. That's why when you always investing or when you're always opening these accounts, kuna kitu inaandikwa next of kin.
Right.
Yeah.
Right.
So painful that I worked at.
And that's why you need to choose your next of kin carefully.
Right. Yes.
Someone who, when they get your money, you won't feel it.
Yeah. Yeah. Okay.
I like that.
Good.
So the question that I want to ask is about compound interest.
Compound interest. Right.
Tell us, give it to us, layman.
All right. Now, yes, good. Now, compound interest, actually, unit trusts actually do that.
Yeah.
They give you compound interest.
Wow.
Now, what is compound interest? You ask. Compound interest is interest on interest.
On
Right?
interest, on interest, on interest.
Yes. Right? Now,
As in?
Oh, kusoma maths.
no, it's
Nilisoma, but
interest. Okay,
this
so
is there's someone listening and they're like, what do you mean?
Yeah.
It's interest on
it's
interest.
interest on interest, not just interest on the principal. Right? So let's say I'm putting in 5,000 today. That's the principal. All right? Now, this 5,000 is earning me interest. Right? Now, tomorrow, when you talk about compound interest, I will earn from the principal, which is the 5,000, plus the interest of that day. Right? Yes.
So let's say the interest is what, 100 shillings.
Yes. So now tomorrow you'll earn interest on 5,100, not just on 5,000.
Not on the principal amount.
Not on the principal only. So it's interest on interest.
Wow.
Yes.
Umepata?
That's
Yeah.
what compound interest is.
Wow.
So just compounding. Unaongeza tu. So
Yeah.
let's say to make a 5,000 leo, if 5,000 imeza 100. So tuko na 5,100. So kesho interest itatoa kwa 5,100.
Also, they'll calculate from whatever you have earned over that
yes, so
particular
it's
day.
interest on interest. Yes.
I like that. So how do you identify a good investment
So
from a bad investment?
yes, and I say this: preserves your capital, gives you income, and grows your capital. Now, and again, unit trusts, they will do all this, and they will also do compound interest, right? Because some actually earn interest on a daily basis. That's why unit trusts are good. When I tell you unit trusts are good, I know what I'm saying, right? Again, because you can get them, easily, right? Now, we were talking about income.
Yeah.
Like getting income, and I talked about treasury bonds.
Yes.
Right? Now, treasury bonds will do exactly that.
Yeah.
They'll give you income, right? And
Will you get it like monthly or
No.
it's quarterly?
it's biannually.
Okay,
Right?
so twice
a year, right? So and I think the video that went viral when my boss was here about the big problem in retirement is income, right?
Yeah.
Now that's why treasury bonds are good, because they give you income, right? So when you invest in a treasury bond, you will get income every 6 months, right?
Yeah.
Now let me take it back.
Wheel tap.
Let me, yeah. What's a treasury bond?
Yes.
Let's start there first.
Yes.
Yeah?
Yes.
So it's a treasury bond is just us, the citizens, loaning the government, right? So the government has a lot of projects that it needs to do.
Yeah.
Has bills to pay. All this, you know what the government needs to do, right?
Yeah.
And other things.
Build roads, bridges, everything. Yeah. Schools, pay teachers. The government needs to do a lot, right? So the number one source of revenue from the government is taxes, right? Taxes, revenues, licenses and all that, right? Sometimes there is so much to do that the taxes won't cover it all, right? So the government is like us; it needs a little
Help.
A little help.
boost, right? And so it comes to us, the citizens, and asks for money, and then it pays us with interest.
Wow.
Right?
Wow.
Now that's one of the safest and best investments that you can make in your life. Why? Because the government always pays back. Great.
That was going to be my next question. So for those who are
I
like,
know.
for those of us who are a
On
little
time.
distrustful of any
No.
government, how do you then
The
The
guarantee?
government always pays back
On
even if it's after
time.
7 years. But on this particular one, Akarigo is asking a very good question. And
On
someone
time.
asked online, is it on time?
On time. So actually, do this, yeah?
They can't pay tenders on time, but they can pay that one on time.
Let me tell you.
No, I'm asking a very genuine
Let me tell
question.
you.
Why do they
ever
pay on
since-
time?
Because it's something that you've signed. It's a contract you have,
Okay.
right? So when you're investing with the government, you actually go and sign a contract, and then this government will pay you on time. So when you actually go and buy a treasury bond today, 6 months, exactly 6 months, right? From the day you buy,
Yeah.
you will get your first return. 12 midnight.
For real?
In your account.
Yes, in your account.
What are the percentage? What is the rate of
Now, treasury bonds, they range between 10 and 12%, right? So they are better, right?
That's
not
a good
bad.
return.
Yeah,
That's a
that's
very good
good,
return.
yeah.
That's really
But
good.
that's little.
Yeah.
No,
For
that's
6
a-
months, I loan you my money, you give me 10%.
But it's
And it's per
guaranteed.
annum,
Per
yeah?
annum. That's a lot.
By
Imagine-
month,
imagine-
by yearly. It's by
It's
yearly.
and so, let's say I invest 100,000 in a let's say
Let's take it's 50 or 100 minimum.
So let's say it's January.
Yes.
And we are starting our investment.
Yes.
We invest 50,000, and let's say the return rate of return is 10%
Yes.
per annum.
Yes.
What's 10% of 50,000?
5,000.
Now it's January, hypothetically. Now June, exactly at the half of the year, we'll get 2,500.
Your pesa, no.
Listen.
You stayed my money for 6 months, you give me 2,500.
Yeah.
For my 50K.
Yes, and then at the end of the year, you'll get another 2,500. So that is 5,000
5K.
a year.
Yeah.
All right.
Yeah.
Next year, same thing.
Can I
So
ask a
let's say
question?
now this
What
treasury.
about the rate of inflation? You told me here that, and I'm going to quote you, that by the time I'm preserving, I put my money called capital preservation. I need to also check at the rate of inflation, which is 5.7, and also look at the interest I'm gaining. Now, if I'm gaining, the rate of inflation is 5.7, by the end of the year, it might be higher. True or false?
No,
or are you
inflation-
trying to tell me
inflation-
inflation will stand still for 1 year?
It
It's
would
not
it
possible.
would go high, but also look at it this way.
Break it down.
We've
for us.
said inflation is 5.7
Yes, you told us. I'm using the numbers
per
that you
annum.
told us.
Yes,
Per annum.
but now this investment is giving us 10%. Per
I'm going to
annum.
earn 2.5.
Wait. Actually, let me.
10% per annum.
I'm the one. Is this mathematics going? Let me get a calculator.
Listen. But a treasury bond is a long-term investment.
Exactly.
So it can
I'm
go.
looking
It
at
can
it
go
like
for
that.
actually even 20 years.
Forever.
So you'll get this. No, not forever.
Until
At least imagine
20 years is a long time.
It's a long time. So
Sana.
without fail, for 20 years, you will get that money. And it's not money you're waking up to go look at.
Exactly.
What's happening? Oh, is my money okay?
Yeah.
Oh, it's not. You as in you put 50,000 there. This 50,000 is working for you to give you 5,000.
That's money that you
That's
wouldn't
a
have
big
had.
deal.
Well, Michael,
Don't you
I
think?
do understand where you're coming from, but I'm coming from a place and a generation where if I give you my money, it needs to work for me. It needs to generate income, and it needs to be income that is making sense for me. Well, I do understand when it comes to, I already have that money. It's an assured money that 6 months I have this money. 50, it's not going to disappear. The bank is not going to close. This is government. That one is a plus, 100%. But I have a challenge where seeing this when I'm looking at what you said, because I took notes. When you said there, I look at the rate of inflation according to my saving, because technically I am saving. If I look at it, because my money is going to be preserved. The capital is going to be there, the 50. But now, is there another option that if I don't want to just get 10%, I'm looking at higher returns? What is the other option you could give someone like me?
I think.
I'm not greedy. I'm just
You're-
trying to figure out.
You're a normal person.
Yeah, I'm like, hey.
And I'm sure many people are also wondering the same. This 10%.
I'm thinking like maybe I could have given Karigo aeke shamba kamulu tupande.
Lakini sasa unaona?
I'm looking at things
also
how they'll move.
Look at it this way. What you're looking at now is capital growth. And that's the third point.
Income, yeah. But
So
now,
over here we are at income. As in investments,
but yeah, I need to be very rich just to let my money stay there
listen.
for
And that's why
for
you,
10%.
and that's why
Woo!
you need different investments for different things.
Yes.
Right?
Yes.
That's why I say things like school fees.
Yes.
You put it in a money market, savings account, right?
Would you advise someone to put now like school fees on things like the treasury bonds?
Now, for
Because it's 6 months, it will not change. 2.5, it's fine.
but now I'm saying treasury bonds are long term, 20
It's a
years.
long-term plan, a
You
long-term
get?
investment.
So this is a good place for if you're retiring,
yeah.
put your money there. And then you're seeing it like you're just buying one treasury bond. Imagine if you buy a treasury bond every month.
Yo, I'ma be rich.
You see? Imagine, no,
I'm going to
listen.
be rich, but this interest is going to take long.
But again, investments
Chai.
And that,
takes time.
But that's a process,
right? That's
right?
the process. Trust the process, right?
Yeah.
Now,
Give me
the
another process.
thing is consistency.
right.
Are we together?
Yes.
So imagine if you buy a bond every month.
Okay, I'll do that.
Every month unaeka 50,000 kwa bond.
Yes.
That means every month from that month,
They
from
don't
the
have
sixth
others
month,
with higher percentages.
as in you're jumping the gun. We're talking about capital growth.
Yes.
We are still at income.
Income. Okay.
Okay.
All right.
Yes. Now imagine.
Trust the process.
Trust the process, right? So imagine you buy a bond every month. Now 6 months from that month, you'll be getting money every month.
Yeah, like
You get? And that's why this is good for people who are retiring, right? But also it's good because it will give you a very good rate of return and it's also secure.
It's a
The
safe.
government will
It's-
always
yeah.
pay back.
it's a safe space.
Are we together?
Yeah.
Yeah,
It's like how
we are
it's like how you
together.
said at the beginning. Some investments may have low return but low
Yes.
risk.
Yeah.
But this one you're getting a relatively high return with
Yes.
minimal risk.
Yeah.
Yes.
Low return, low risk.
The thing is, you are.
You guys doing the math
The
here.
thing is, you are putting away your money for quite some
Yes,
time,
yes.
right? So that's the bad side of it, because you're sacrificing your money, for 20
Now
years.
we are talking. Now you're getting.
But-
But the risks.
But the risks are low,
Yes.
right?
Yes.
Yes. Now,
Okay. Before you continue, I'm gonna pause you right there because we need to take a quick break. If you are just joining us, we are the adults in the room, and as I have been saying, we are being schooled today. We are talking about investments, making your money work for you, and essentially how to grow your money. And we are with the programs manager, Michael Thotho from Centonomy, and we are having a great time. So continue to stay tuned. I've got some more amazing music coming up right now. We have programs manager from Centonomy, Michael Thotho, in the building, who's teaching us how to invest our money and make our money work for us. We've been having a great conversation, and I'm so excited to sink our teeth more into this because we've still got more to go. We've still got a lot more of his conversation and his insight to dig into. Now, before we actually tune back to him, I'd love to see what the socials are saying.
Victor Ochi says, how can someone join a unit trust? I'm tuned in from Kisumu. Michael, Did you say that you go to www.cma.or.ke? You'll find a list of fund managers. Then you can pick who you want to go with. That's what you meant?
Yep.
I've been paying attention in class.
Yes.
Clap for me. Yeah, thank you.
Now that's for fund managers. What was the question?
Victor?
Victor?
Victor is asking how he can join.
Unit
Unit
trust.
trust.
Yes. Yeah.
So it's www.cma
Capital Markets Authority.
Yes.
Yes.
.or.ke
Yes.
is the
Yes.
website to go to.
Let me give you another one question before we continue. We have Kipligat Koech on Twitter who says, thank you for our guest, Mr. Michael Thotho. My question today is, he's tuned in from Kericho. He says he's learning and he has a question. Which one is good when it comes to savings? Do you prefer we save on between SACCOs or banks?
Now, between SACCOs and banks,
I'm sure banks are listening and SACCOs.
yes,
Yeah.
and if they're listening, they will correct me if I'm wrong. SACCOs in full is savings and credit cooperative
Yes.
societies, right? So the main reason, or one of the main reasons you join a SACCO is because you want to get credit facility. That's a loan, right? You'll get it through, guarantors, right? And it's cheaper than commercial banks.
Yes.
That's true.
Right? Yes. So that is one of the reasons people join SACCOs. And then also SACCOs also give dividends at the end of the year.
Unlike banks.
Unlike banks. Yes.
So in short, he doesn't want to say it, but he's saying SACCOs are better.
But SACCOs, again, what do you want your money to do?
To do for you.
Yes.
Mm.
The
So,
purpose, as
yes.
you said. What's the purpose?
So if I want to get a loan, a cheaper loan, then I'll put my money in a SACCO.
Okay.
Right? Because I'll get it at 12% per annum, as opposed to a bank which is 14% per
Yes.
annum. Right? And that 2% is a lot of money, right?
Yes, true.
Right? Yes.
Okay.
Wow.
Before we break, you had a question.
Oh, yes. So now I think in thinking about that then, how is it that that SACCOs are able to offer such a lower lower interest rate compared to that of a bank? How does that aspect of it work?
First of all, it's because when you're borrowing from a SACCO, you will borrow, the security will be guarantors, right? So other people, members of the SACCO who know you, will guarantee you, will vouch for you. Like if I give Mike a loan, if he doesn't pay, I will pay, right? Now, if it's a bank, for you to get a loan from a bank, first of all, you need to see, is it a secured loan, right? So that's why you need your logbook,
Your
you need your
title
title deed, right? If it's unsecured, you will need like a very good pay slip
Or your letter from an employer.
or your letter from the chief.
Yeah.
You get.
Yes,
Sometimes
yes.
you get your pastor.
Yes. So you see now it becomes a bit easier to go to a SACCO because you might know 2 or 3 other people in that SACCO who will vouch for you.
Yeah.
Right.
But guys, before you vouch for someone,
Hey,
make
ask me.
sure
Make sure you
that-
know.
Yeah.
make sure you know that this person is taking the loan for something good. Make sure this person is credit worth.
Right.
Make sure this person is, as in, so that because people guarantee other people and they're
They
left
ghost
with-
them. It
yeah,
happened
Goes-
to
they
it
me.
gets
ghost them
messy.
and you end up paying a loan
Yeah,
that is
it's
not
very
yours.
Not
So
yours.
Yeah.
don't just say yes
Yes.
to guaranteeing people.
Yeah.
I understand.
Yeah.
Now, before we went on the break, we were talking about government bonds and
Yes.
income generation.
Yes.
So I know there's going to be people out there who are thinking, now, if I'm really putting my money into a government bond and I'm only getting a 10%
Yeah.
return,
Yeah.
can we just speak on that a little bit more? Because I think we're going in the right direction,
Yeah.
particularly just to kind of demystify
Yeah.
what a government bond is intended to do and in what kind of circumstances you'd actually get into one.
Yeah.
Right. So what's its intention when you're getting into it is the issue of income, right? So you're assured of income every 6 months, right? Why you should also get into government bond is the security, right? They're actually called government securities
Yes.
because they're very secure, and the government of Kenya has never failed to pay. Never. I think in the world only Argentina and Greece.
So it's
Right?
like a global.
Yeah, it's a global thing. Yeah.
Wow.
And even when you watch this series and movies, guys,
Yeah.
these guys are investing
Treasury
in bonds.
bonds.
You'll hear that. So only when the government is doing really bad, like Argentina and Greece,
Yeah.
is when, and also when the government is doing really bad, you won't really be looking at your money. You'll be looking at
At
other
the cover,
things.
yeah, true, very
like
true.
your security and all these things, right? So that's why government bonds are good,
Right.
Because they're secure and they give you income, and then at the end of the day, you will get what you put. Yes.
Into it, yes.
Yeah.
And I like the fact that you said if you are involved or if you've invested in multiple,
Yes.
then that's when you really start to see the
Yes.
power of that long-term investment.
Yeah.
I want to ask a question and slightly just remove you from the treasury bills, but more. Yes, treasury bills or bonds are secure.
Yes.
Low risk.
Yes.
But okay, in my opinion, and I'm saying it, I know you might, I'm saying it from our experience. I actually have told you I have two while we're on the break. But if I am looking for higher returns, higher than what I can get from a treasury bond or any of those securities, what other avenues can I invest in? Are there any options?
Yes. Now you're talking about the third point, which is capital growth.
Yeah.
Yes.
But before we go to capital
Yes.
growth, let me just tell guys how they can buy this bonds. If there are people who want to get income and who also want security, they might be thinking also, where do I get this bond? So it's actually the government of Kenya which auctions bonds, right? So just go to the central bank website, and then you will get the details of bonds there. Or alternatively, in the newspapers every 2 weeks, they are there.
Yeah, I've seen that.
Right? Yes. And the minimum investment is 50,000. Yes.
Maximum?
Now it's you invest in multiples of 50,000.
So after every 2 weeks, the government is always looking for money.
Yeah, it's always looking for money.
Right.
But it always pays back.
Yes.
Yes.
So before we actually transition into things that will grow your capital, are there any other income generating investments that we could consider outside of bonds?
Yes, there are, but this and they're very common in Kenya. Who will guess?
Ponzi schemes.
No.
Forex trading.
No.
I know.
No.
I know that one. I know it.
And we like it, Kenyans.
I know it. Well, I'm trying to remember.
Property, rental property. You can plot
Real estate.
real estate. You own a few houses and people
I
pay
told
you
you I
every
know.
month.
But you did say.
Because I wasn't remembering. I know.
So there's
You are
that.
those children.
Yes.
There's rental property.
Yeah.
And not just any property, rental property. So
Right.
if you own rentals,
Kaploti.
yes, kaploti yenye umejenga na watu wanaishi hapo, then you will get monthly income. Yes.
Wow.
I see. So I guess at what point should someone consider getting into that as opposed to, because obviously you have a few different options when it comes to things that will generate income. So how do I think I have some capital, I have a little bit of cash that I've been saving? Do I put it into bonds? Do I look into real estate? I know there's some risk associated with both. How do I navigate that conversation?
Now, you will look at what you want to get. And I will say this, real estate, especially residential real estate, you will not get 10%. You will get at most 7 if you do the math correctly.
Yeah.
And I don't know why we are so fixated in properties. But I think it's an African thing.
They appreciate.
I'm not saying properties are bad. But when you look at it, when you look at the math and the rate of return, in my opinion, I'd go for bonds. First of all, because
Really?
50,000, right? You get. So no stress, no hassle.
Yeah.
When you go to property, you need to first of all buy the land.
Yes.
And then now construct,
Yes.
right? And then now get a caretaker
Yes.
to be taking care of your...
Your investment is huge.
Yes.
Advertise.
And it's a lot of money
Yes.
you need to put down first, right? And then there's the monitoring after that, right? You need to maintain this house. When someone leaves, you need to advertise, you need to get an agent, all these things. But a bond, you just buy and you sit
And you're
down.
good.
Wow.
And your money works for you.
But
But again, people are different.
Yeah.
And so it's just you looking at what you want to
Or you
get.
can do both.
Or
you
degree of
oh,
risks
yes.
are different.
Yeah. It's just you looking at what do I want to achieve? What do I have? Yes. And
I
then
see.
you now choose.
So when it comes to real estate investment, I know some people will look at it like, particularly if you're getting into like, let's say apartments, they'll look at the monthly income that I'm getting from that and they'll think this is the reason why I want to get into property. What are your thoughts around that?
Yeah, again, if it's the monthly income, then that's good.
Yeah.
But also look at it, the initial investment. What are you going to put down
And
first?
are you willing to part with that amount?
Are you willing to part with
Leave
that
alone
amount?
living. Do you have it?
Do you have it first?
You know,
of
many
all?
of us forget.
Right?
We want dreams and we don't have the money.
Yes,
True,
and then
true.
also I've said the hassle and the stress that might come with that also,
Yeah.
right? Because you will need to take care of that house.
Yeah.
You need to paint it now and then, water, electricity, all these things. You need to take care of the tenants, right? So yeah, when you're going to real estate, you need to think of all these things that might come. But yeah, real estate is good because there's that assured, return.
Yeah.
You'll always have people living, and people will always want a place to live. And then it's something you can see, it's tangible. You can live to your loved ones. You get.
It's one of those things. If you have excess income, let's say.
Yes, so if you have
You can
excess
spread it
income,
out.
yes, you can. Again, what the best thing you can always do is spread your investments.
Yeah.
So capital preservation here, income here, capital growth here. Yeah.
And really diversify.
Yes.
Okay. If you are just joining us, we are the adults in the room. We have got the likes of Centonomy in the building with us, more specifically Michael Thotho, who is the programs manager for Centonomy, talking to us about investment. And we are so excited because I am learning a lot, especially now that I'm home and I understand the difference between a chama and a sako and government bonds. I'm very, very excited. Do not go anywhere. We're going to take a small break. I got some money, power, respect. Michael Thotho in the building, who is the programs manager for Centonomy, talking to us about investment, how to make your money work for you so you don't have to be out here working for it. Now, we were on, we've been talking about a few different things. More specifically, we've just finished talking about income generation.
Yep.
So let's switch gears. Let's actually get into capital growth, something that actually grows your capital. What does that mean and what does that look like?
Means exactly that. You remember I said finance guys are
Remember,
not-
you said finance guys are
so
different.
creative.
Everyone means exactly.
So what you put, your capital, your initial investment, you're now putting it with the aims or with the hopes that it will grow, right? It will grow. Yes.
I see. So now there's, because obviously if let's say I have a government bond,
Yeah.
which is something that generates income.
Yeah.
Is there a way for that to also become something that grows my capital? Would that be like, for example, taking that money and reinvesting it into the same thing? Or can you just explain that a little bit?
Now, you might take the returns and reinvest them now in somewhere that's might grow your capital,
Okay.
right? Great. Capital growth options are like shares. Shares are good capital growth options. And I say this because I invested in shares. I'm still investing in shares. And I actually, invested in shares and then sold some of my shares to buy my car.
Oh, fantastic. Okay.
Right. So
Is that a good investment decision?
yes, because again, it's what I wanted. And I am cognizant that this car is not really an asset. But I also saved and invested for it.
Oh.
You remember when I told you when I was in uni, my mom
Yes.
put me on
Yes, the
Falcom shares,
shares.
right? So that's why I started my journey. So I started buying my car a very long time ago.
Right.
Right?
Right.
And I kept on adding, buying even more shares.
Yeah.
And then that's where I got some of my money to buy my car.
Would you advise someone to invest in shares, considering that sometimes some drops?
Now,
Some-
it depends on what you want, right? It depends also with the level of risk that you are able to take, right? So if your risk appetite is good, you can take in the risk, and you are young, invest in shares, right? As one
If
of
you're
the-
young,
If you are young and your risk appetites are good, then
Can
you
we say
invest.
risk tolerance instead of appetite? Because sometimes
Yes,
I lost
so
money in shares.
yeah, so yeah,
Someone is tolerant.
so you have the appetite. As in you can take in the
that's
risk.
like when you say appetite, that you mean like high risk.
Yes, as in you can take it in.
You're
Whether-
willing,
you
you're
lose
willing
it.
to lose it.
yeah, as in
Alright,
you can
you
take
can
it
buy-
in.
50,000 just
Ikienda ni hivyo.
becomes
Si
spend
complain.
Yes, and that's why I said you can't put your rent money here. You get
School
you
fees.
can't put school fees here.
Yes.
Yeah.
But can I ask, why do you say that when you're young? Is there a connection between being
Yes,
young
there
and
is
taking
a
more
connection.
risk?
Yes, because the younger you are, the more risks you can take. When you're young, when you're in campus, when you're just started your first job, you don't have a lot of responsibilities. You might not have a family. You might not have
Like you
a
guys
lot.
have better appetite than me.
Right.
you
You have
get
a
right.
child.
Right.
I'll get a heart attack.
Yeah,
I
so
get
you-
my 100K was to disappear.
Yeah, so you don't have a lot of responsibilities looking at you, right? So you are able to take that risk, right? And then when you're also looking at capital growth, growth takes time, right? So when you want your capital to grow, you might consider investing someplace for like 5-10 years before actually you give this investment time to grow, right? Like shares. A good company, would just grow like that. Like we're talking about Safaricom. And I can talk about Safaricom because it's a publicly listed company. Started at 5, it's now 40, right? Imagine, 5 to 40.
Wow.
You can see the percentage, you can calculate the percentage, right? But then look at how long it has taken, right? Yes. So, guys, that patient, I think, most guys are not that patient. They want pap. But again, I always say you need to spread your money. Put some in capital preservation, some in income, some in capital growth, right? And then give it time. Investments generally take time, right? So if you have some good money set aside and you can take the risk and you have some time, then you might as well buy some shares, right? Now, be very careful when you're buying shares. Why? Because there are high risk, right? And they say high risk,
High reward.
High returns.
Now, I want to correct you.
Kept quiet. Because me, if I don't know anything, I keep quiet.
Now, yes, they say high risk, high return,
But
or
also
reward.
high losses.
But now,
Both ways. It could be both ways.
It could be both
Both
ways.
ways. High losses
So,
or high returns.
we say high risk, high potential of return.
High potential.
It's not always guaranteed.
Ah.
Right.
Yeah, that's true.
Right? It's not always. So high risk, high potential of return.
Yes.
And when if you've been paying attention, we've looked at capital preservation, which is low risk, low return, and then we talked about income, which is sort of in the middle.
Yeah.
It's moderate, right?
Yes.
And now we're talking about capital growth, which is high risk, high potential of return, right? And that's why I said, so what do you want your money to do for you? Do you want to grow your money? If you want to grow it, then you need to have the risk appetite. You can take in the risk, and then you need to give it time, right? Now, for you to buy shares, you need first of all to have a CDSC account. You need to open this CDSC account with stockbroker, and the Capital Markets Authority, again CMA, will tell you the list of stockbrokers that are
Credible.
credible, that they've licensed, right? Now, you look at the stockbroker that you want, and then you go through them and tell them, I want to buy shares of company XYZ. Right? Now, this is why it gets complicated. How do you choose a company to buy shares in? Because there are like 20 companies listed in the NSE.
Yes.
How do you choose which companies to buy shares in?
Yes.
Now, there are a few things you can look at. First of all, I said initial amount of shares you can buy is 100 shares,
Okay.
right? So shares is 100 shares. Okay. Now, you also need to look at the product or the service that this company is offering. Right? What does this company do? What does this company sell? And then ask yourself, will this thing be sellable 5 years, 10 years down the line? All right?
Yeah.
All right?
Yeah.
You get it?
Yeah.
I like that.
It makes sense.
Yeah.
Right?
Yeah.
So
No,
when you,
she's having an aha moment. The rest of us already had this moment.
so you get. So ask yourself, what is this company selling? What product or service does it sell?
Right.
Will it be relevant 5 years, 10 years down the line?
Right.
If yes, that's number one tick. Number two thing you need to tick is the market. The people who are going to buy this product or this service, are they increasing in number or are they decreasing? Right?
The
No,
people
this
who
is
are buying
research
this.
you do it, or this is research your broker gives you.
This is you doing it.
Your due
Now, first of all,
diligence.
investments, they take time, and they also need you effort from your side and research from your side. And that's why I said unit trusts are good, because instead of buying shares directly, you can buy unit trusts that will invest in shares.
That
They are
will-
called equity funds. Now,
So
shares,
it's sort of like a middleman.
yes. So shares are also called equities or stocks.
Yeah.
Right? So if you don't want to, okay, let me.
It's
Number
okay,
one.
take us slow.
Number one, we've said you need to look at the product or the service that
Right.
this
Yes.
company is selling,
Yes.
and
The
then
longevity.
ask yourself, will people still be buying this product? And then number two is the market. Will there be people wanting to buy this product or this
5
service
years.
5 years, 10, or are they increasing?
The TA will
Yes.
it still exist?
Yes.
Yeah.
Now, number three is look at the people who are heading that company, the people who make the day-to-day decisions of this company, management, the board of directors. What do people say about what are you hearing in the news about these people?
Surely, Michael, we start doing all this.
Yeah. Okay. Listen.
Hey, it's
Listen.
work.
Yeah, it's work. Investments again, they take work, right? And that's why they're fun.
Yeah.
And that's why when you're looking at the news, kwanza pale 9 o'clock news, and then you're seeing prices of shares,
Yeah.
yani, that excites me. I don't know if it
Yeah.
excites someone else, you know.
Does it excite you?
Yeah,
I
so
think
can
if
see
you have the knowledge, it can
yes,
excite
so
you.
if
Yes,
you have
now
the
that
knowledge.
you have the
so
knowledge.
now so now you can see like the product, the service, you know,
Yes.
and then now the board, the people who make the day-to-day decisions.
Yes.
What do people say about them in the news? What do you
Yes.
hear about them in the streets,
Yes.
and the papers? You know. Now, number 4 thing you need to look at is the profit.
Uh-huh.
Is this company making profit, right? And how you can tell a company is making profit? They announce it. You
Yes,
know,
they do.
Just juicy 2 banks announce major profits, you know, and we're in a pandemic. So,
Imagine.
guys, buy bank shares. But
Right.
anyway,
Actually, we have a show on KTN at 3 p.m. Yes, that you can be watching.
you get,
Yes.
right? Yeah.
For
banks-
business, it gives
banks,
that. We have been seeing
announce
that.
a lot of profits. So that's the 4th thing that you need to look at. Now, you remember 1, 2, 3, 4 things. If you don't want to do all these things, buy equity funds.
Michael, can we just take a pause on that?
Hold that right there, because we're going to get into that. Equity funds are coming up next right here. We have Michael Thotho in the building, the programs manager for Centonomy, talking to us about investment, where to put your money and how to make it work for you. I hope you're learning a thing or two. Now, I'm telling you, if you are wondering how in the world am I going to be able to take my money from where it is now to where it should be, don't worry, keep your head up. We've got Michael Thotho in the building, the programs manager for Centonomy, who's out here schooling us on how to make our money work for you. Now, I know we wanted to give him time to tell us all of this juicy information so that you can gain knowledge, but we're going to take a few calls before the end of the show. 0719 012 600 is the number to call. Hello, Spice FM. Hello, Spice FM.
Please reduce the volume of your radio or your gadget, and you can proceed.
Yeah. Hello.
Hi, sir. How are you?
I'm okay. I've had the information. It's fun.
Yes. I hope you're
Yeah,
gaining
yeah.
some knowledge today.
Yeah. I'm actually a trader in the market.
Oh, fantastic.
Yeah.
Now, before
Because I've already observed, like, for example, like in Kenyan markets, actually small. Actually, the bank they take around 25%. Safaricom is about 60. Yeah. But
Okay.
I wanted to answer Barbara. Hi, Barbara.
Hi, how are you?
Yeah, I wanted to answer you about the reason why the government need to pay the bonds.
Yes, please.
Yeah. Primary reason why they have to pay it, because if they won't, the government will have to go bankrupt. Because they normally have to pay it. They normally do it like recycle it.
Okay. What's the question, sir?
Yeah. It's not a question.
Oh,
You're
you
just
said-
responding.
Oh, you're responding. Okay.
Yeah, it's not a question.
No
yeah.
problem,
They
thank
normally,
you.
They normally recycle it. Because like in Kenya right now, the debt is around, in the bonds market, is around 2 trillion and above there.
Right.
Yeah, so when people buy these bonds, and then the government does not have enough money to pay them, the government actually issue new bonds
Okay.
to cover the old ones.
I
So
see.
that's the reason why the debt normally expand. If you look like in the US, the government had to reduce the interest rate so that if it could not be compounding at a very high rate. In
I
Kenya,
see.
we haven't done that yet. Yeah.
Oh,
But I'm expecting in the future maybe the interest to go low.
I see. So you're clearly someone who knows their knowledge.
Yeah, I have a good knowledge about it.
Thank you so much. What was your name, sir?
My name is Paul.
Paul, thank you so much for calling. We really appreciate your insight.
Okay.
Have a great night. Hello, Gladys. Hello, Gladys.
Hello, hi.
Hi, how are you?
I'm good.
It's good to hear from you. I hope you're well.
I'm good. My question to the guest.
Yes.
when you say buying shares is a risk, and you've already bought and the amount, the shares goes down, does it mean that you are turning lose the money completely?
Yes, if they don't go back up, you might lose the money completely. So that's why high risk, so
High potential.
high potential of return. So the return is not always guaranteed. Yeah. So the thing about shares is you need to be very active and you need to be checking what they're trading at, right? So, and then you also need to tell yourself, hey, if they go below this, I need to sell them, right? So that I also don't burn my fingers so much. Yeah.
Okay.
Yeah.
Thank you.
Thank you so much, Gladys.
Thank you.
Wow.
I actually like what Michael said before we went to the link that, you know, when you talked about high risk, high potential and the issue of due diligence, I did not know that you really need to do a lot of due diligence. I knew the basic, but even I started looking at board members. But it is very important that before you go into that, you do your homework.
If now you find a board member has been in a scandal,
You run.
That's an X.
for real?
Yeah.
Wow.
Because you don't want this person, you don't want to put your money, this person in a scandal, you don't want him to be the one making the day-to-day decisions of the company that you're investing in.
Yeah, that's a good point.
People can drop out and your share goes down.
Wow.
Or he might do something that's not really good for the company and the share goes
Tina
down.
Masese has a question for you, Michael. She asks, what happens if one loses the investment due to poor fund management of a unit trust? Does CMA ensure you get back your money, or do they just register the company?
So, first of all, the work of the fund manager is to make sure that the money will grow, right? So what they will do, they will diversify the risk. So they will invest here. So they won't just put your money
and they
in
will tell us they're doing that.
Yes, they will tell you. So you bought this unit trust. So we've invested 20% in bank accounts. We've invested 30% in Treasury Bonds. We invested 10% in shares. You know, they will tell you. They will actually give you a report each and every month, right? And then also they are regulated. And then also there is the trustee. So the trustee is there to make sure that this fund manager is doing their job, right? So there are levels and layers of protection when you're investing in unit trusts.
Fantastic. Now, as we wrap up today's show, first of all, thank you so much for coming in. It's been
Anytime, man.
It's been incredibly knowledgeable.
It's been fun also, yeah.
Please plug us into how we can find out more. For those of us that want to learn either about Centonomy or learn about investing, what are the options? Give us all the plugs.
So right now, first of all, where are you at in your life? I'd like to say, if you're between the ages of 18, 24, 25, then we have the Centonomy Campus Edition, right? Which is a program that is for guys in campus, guys in uni, and it doesn't matter which uni you're in. Guys in diaspora also join. We had guys in Uganda, in UK, in the last cohort. And
you do online classes?
Yeah, we because of the pandemic, we had to shift. Now we're doing online, and it's given us a bigger audience, right? So if you're in campus, we have the Centonomy Campus Edition, and it starts on the 9th of October. So you actually have some time to register for this last cohort of the year, right? If you're a bit older, you're probably working, or you have a business, or then you can register for Centonomy 101 and Centonomy Entrepreneur. The last cohort for the year already started, but we run the classes again each and every year. So we have a February intake. And where you can get all this info is www.centonomy.com. Check out our socials, Centonomy IG, Centonomy Entrepreneur, and you will get all the information there, right? And then also we have a program for guys who want to advance in their careers. That's the Syntomic Career Hub. Yes, so if you, depending on what you want in your life, you can actually choose the program that you like to attend, and then you can attend, and then we have experts. Now, leave alone me.
Yeah.
We have people who do this on a daily basis. Like if it's shares, it's someone who works in the stock market.
Yes.
And they'll come tell you this is how shares work.
Yes.
This is how shares are valued. this is a PE ratio, this is a price book value. You know, all these things that we can't get into right now.
Yes.
You get all this information in the class, right? If it's treasury bonds, we have someone who works with pensions, and pensions, most of them invest in treasury bonds. And they'll come and they'll tell you this is how treasury bonds work. So one of our main selling points of our classes is that we have experts who train in these classes.
Wow.
Right? So it's not, just getting information from someone's out there.
Yeah.
You're getting legit information from someone who is not, again, selling you a product. They're just giving you the knowledge and the information. Again, guys, remember, parting shot.
Yes.
I think we have 99 days before the year ends.
Yes.
So, so just think about it, that as a challenge. What are you going to do before the year ends?
Fantastic. Thank you so much for being here. We are the adults in the room, and I hope you've learned a thing or two on today's show. We endeavor to have more of these conversations that can help you grow, not just in life, but in your finances as well. From everybody here, we bid you good night, and we shall see you tomorrow. Take care.